Hello, everyone, and welcome back to another session of the Let's Get Technical series with me, Kavita Agrawal. We are here today to get into the in depth analysis of ICICI Bank. ICICI Bank has given fantastic rally in a very short time, which is very unlikely for large cap stocks like ICICI Bank. So, in today's session, I want to delve into the detailed analysis using trend lines, some basic indicators like RSI and EMA, and I want to show you how you could have identified the trade setup in ICICI Bank and taken advantage of this opportunity. So, without much delay, let's get started with the chart analysis of ICICI. Now here's the chart of ICICI, and in order to help you out, I'm going to clean this chart of all the drawings and I'm going to show you the analysis from scratch. So let's quickly switch our layout here and let's make some setting changes on this. All right, that goes. And here we want to new drawings will sync in layout. That's good. And now in this layout, which is EXP Invest Live, this is the layout that we want to use for our live sessions because I don't want my personal notes and my drawings and my markings to get removed, but I also don't want to show you a chart that is overcrowded. So we'll quickly just set everything up for me. All right, trading view's got its own agenda. And now, as I open up the chart of ICICI Bank, I want to remind you that after the discussion of ICICI Bank's chart, I will be taking you through your stock queries. So if you have stock queries, fill up this form link right here. I'm also sharing the link in the comments. And fill in the name of the stocks, your cost price, and the help that you need in it. After this session, I will be opening up the form and helping you out with your queries. Yeah. Awesome. So far, we've helped almost more than 100 people through these stock queries. And if you need help, you can also avail the same by visiting this link. Okay, so we're going to close this and let's remove all the drawings. Now, as you can see, for the purpose of this analysis, I am using a 6 chart layout. Let's go full screen so that there are no distracting elements on the screen for you. There you go. Now, like I said, it is a 6 screen layout, starting from the 3 minute time frame to 15 to 75 daily, weekly, and 5 week. You will see there is a progression of 5x as we go higher time frame, and division by 5 as we go lower time frame from each other. This creates a very nice zoom in and zoom out effect. And when you trade in any stock, maybe for short term or long term, it's very important that you're taking into consideration all the trends and making a bet which has the highest probability of success. That's only going to happen when all your trends are, or all the waves unfolding in the stock are in the same direction, right? Or if not all the waves, at least one time frame higher and one time frame lower, then your decision making time frame should agree with each other. Which brings us to the next question, which is a decision making time frame. So for me as a swing trader, 75-minute chart is the primary decision making time frame. Now, a lot of you might not have heard of the 75-minute time frame very often. The hourly time frame is more commonly used, but there are two reasons why I use the 75-minute time frame over the 60-minute time frame. The first reason being that the 60-minute time frame leaves a residual 15-minute candle every six candle, I think, or is it every seven candle? Let me just quickly confirm that. I think 70, so 75 into 5 is daily, but if I divide this by 60, it is 6.25. So every seventh candle is a residual 15-minute candle. So it's not a complete candle. So sometimes it can give the sense of a doji even though it is not a doji, which I don't like. And another reason why I like 75-minute time frame is because it divides the 375 minutes trading minutes in a day into clean 5 full candles, right? So, having explained that, when we start the analysis of any stock, we always want to start the analysis from the largest possible time frame. In this case, using the 5 week time frame may not be in a best advantage because it doesn't really show the waves in enough definitions to be able to draw trend lines. So we'll use the weekly time frame and then progressively go lower. So I like to use the cloning method to draw my trend lines. So here I am going to change the thickness of the trend line to 2 so that you can view it better. And I will identify two most important low or high points, as the case may be, to draw my maiden trend line. That is the first trend line on the chart, right? And then I will go ahead and clone this to place it on the uh, more important points, the highs or lows. Now, I'm getting a message from my team that the video is lagging a little bit. I'm sensing that maybe it's because of my internet. So, don't worry about it. I will be uploading the recorded session, which will also be edited and it will be neater. So, you can, after the session, you can go and watch the recorded session, which will be uploaded. If you want the link of the recorded session when it is uploaded, just join my Telegram channel. I'll be posting the link over there. Right. So this is the first set of trend lines that we have drawn, and I'm going to go ahead and also cover these resistance zones because the price seems to be taking strong resistance right around here. Right. Now we can go down to the weekly time frame, but before doing that, let's take a quick look at the daily time frames RSI. So what I'm seeing is the RSI is taking resistance at the level of 72, which is 70 72, which is good, which shows that underlying strength of the bull trend is still quite strong and more upside is expected as per the weekly time frame. So the underlying bull trend is pretty strong. And if you also look at this MACD histogram, which is basically used to assess the volume, and this is the setting, as you can see, what this is showing is that the volume is supportive of the uptrend. We are seeing strong volume growth when the price is going. So the weekly time frame has all good things to say about the uptrend which is unfolding. Now, the daily time frame, if we analyze, the trend lines drawn are pretty justified. Maybe we can adjust this one a little bit here to match the speed. We can see that there was a tiny little fake breakout somewhere here, just something to note. And that also actually happened on pretty good volumes, but it's just that the stock of ICICI Bank couldn't sustain that, which is all right. So what we'll do is we want to assess what is going on. See, when you're analyzing a stock, just analyzing the recent price activity is not important. You need to also familiarize yourself with the history, with the way the price has moved in the past, what is its tendency. So, what I can see here is the stock has a tendency to kind of uh, grind against a resistance trend line before it really breaches it, and it will kind of try to give a breakout above it, fail, maybe come back down. So this trend line seems like it would do a little bit more justice there. And then it kind of, tries and then keeps falling back down before it ultimately reaches. Uh, this kind of movement is very typical in large cap stocks because they need a strong reason usually to break above a strong resistance zone. And using this cloning technique of drawing trend lines usually gives us pretty good assessment of the price activity. So here I can see that the on the RSI, which for which by the way I use a 25 period setting, I can see that the RSI barely ever touches the level of 30. And the last time that it touched the level of 30, the stock has given a pretty good rally. The first leg was around 2x in a matter of around 2 years, then a little bit of correction of around 20%, and then the next leg of rally is unfolding. What also stands out to me is that the first leg of rally before it corrected, there was a RSI negative divergence which started to form, and here also we are noticing a broad RSI negative divergence unfolding on the stock of ICICI Bank. But does this mean that you should steer away from ICICI Bank from long term investment perspective? The answer is no. The stock is attractive for long term investment, but our concern here is short term swing trading. So the question that I want to ask is this is the daily time frames analysis suggesting bullish underlying trend on the uh, in the stock of ICICI Bank? And here I am going to analyze the volume and the momentum. The momentum has been sustaining itself very strongly above the level of 47, 45, 47, and on the upside, it is also testing the level of 68, which is way above, very comfortably above the level of 60. This tells me that the stock is in a bull trend. RSI, so this is called the RSI bull range, and this is positive for sure. But is it a good time to make an entry now? For that specific analysis, we need to go down. Another positive observation on the chart is that the volume is increasing when the price is increasing, and the volume is going down when the price is either going into consolidation or when the price is declining. There is clearly decline in the volume. I use the MACD based on volume primarily because it makes the change of volume very, very prominent. See, if you want to do analysis, the exact level of volume or RSI or even price doesn't mean anything. Everything has to be relative. What was the price doing before versus the volume? What is it doing now? What does that change, relative change, mean, and how does it contribute to your insights about the stock's movements? Now, coming down to the 75-minute time frame, the 75-minute time frame again gives us a much more clear picture of strong price growth with strong volume growth, and at the same time very strong RSI activity, right? So the 75-minute time frame also supports. 15-minute time frame is also very, very bullish. So what I would say is that uh, if you are holding ICICI Bank currently, right? So in order to add a little bit more dimension to this chart, I would like to draw more trend lines. So I will clone the existing trend line and I'm going to draw. So knowing that there is this trend line, I know that it is an important resistance zone for the price. And for as per the recent price activity, I can clearly see on the 75-minute time frame that these 2 points do contribute to a pretty important resistance zone for the stock of ICICI Bank. If I shift this a little bit lower, yeah, in like roughly this is pretty important, and the breakout above this trend line also has happened with pretty strong volumes. Going back to the 75-minute time frame, the volume is pretty strong. So if you are someone who is trying to get a fresh entry in ICICI Bank, I think a good level to make that happen would be somewhere around 1138. And why do I say that? Because if you look at the 15-minute time frame, the 15-minute time frame, even though is very bullish, it has given a very tiny little RSI negative divergence somewhere around here, right? This suggests this suggests short-term correction is possible in the stock. So when the stock comes to retest basically this trend line over here, this would make for a potentially a good entry. But then if you make a good entry, you also need to know where your stop loss would fall. The stop loss for ICICI Bank would be around 1102. Actually, make it a little bit lower because 1100 is a very important psychological level. So 1097 or 1098 would be more appropriate as a stop loss here. And then comes the next question of where should my target be? So over here is the target is very clearly this trend line because we've already seen a resistance breach. So our expectation would be that the stock goes ahead and reaches the other, or at least tests the other resistance level. Now obviously there is no guarantee that this is going to happen, but this is our best case scenario. So after having assessed the target, the stop loss, the potential entry point, comes the very important question of whether this opportunity is worth your capital, worth your time or not. That is going to be assessed on the basis of what we call risk to reward ratio. So we'll calculate the risk. The risk is around 3%, and we'll calculate the reward. So the reward is around 8%. So it does not make the cutoff for our minimum criteria of 3. So, what can we do here? This basically suggests that the entry level over here will have to be lower. So, why would I be changing my potential entry level to lower? What would encourage me to look out for a potentially lower entry level? Two things. Look, on the chart, I would like to see if there is a potentially a lower resistance or support zone. So remember we discussed that there is this range of resistance. So instead of putting my potential entry here, I would like to take it a notch lower to the lower range of my potential entry zone. So if I can mark this here, right? So this would be my potential entry zone with first GTT order set at around 115, 114 level. Why would I do this? Two things. Number one, I need my risk reward ratio to be more than 3 to justify this opportunity, because there is no guarantee, obviously, that the target will get achieved, but I would like my chances of success to be as high as possible, right? So over here, I would set a potential entry GTT at 115. From there, my stop loss, which I moved a little bit lower to 190, 1090, so 2.3. And then over here, my target is around 9 to 10%, which is pretty comfortable, right? Another reason why I am okay with setting a potential entry at slightly lower level is because I have done the overall market analysis, and on Nifty and Bank Nifty, what I saw on the last working day, that was yesterday, right? Monday day end, sorry, Tuesday's day end, what I noticed was that Nifty gave a sharp reversal. And if you look at the resistance level from where that reversal came, it was exactly 22,770. A little bit more correction to follow in Nifty. So if that happens, we can expect a little bit more correction to come in banking stocks as well, in other financial sector stocks, and most importantly, especially when I'm very close to taking a position in a stock. The 3 minute time frame is suggesting a negative divergence on the RSI, which indicates very short term weakness. So the 3 minute time frame analysis is relevant for 1 or 2 days of insight maximum. 3 minute time frame is because very weak, so it cannot give you more insight than the next 1 or 2 days. So if I'm very close to decision making on a stock, I will do the analysis of the 3 minute time frame. And here the 3 minute time frame is also showing a negative divergence, and not just negative divergence, it is showing a negative range shift. Why? Because the RSI here has come down to the level of almost 60 and is touching the level of 30, a phenomena which has not happened since this bull trend started. So we can expect, now if you want to observe this in the past, you can see this in the past as well. See, this is where a negative divergence was formed on the 3 minute time frame, and a negative test and the breach of level of 30 repeatedly on the 3 minute time frame, which suggested a correction. What you can also do is, and then finally what happened here was that a positive divergence, a strong positive divergence occurred on the 3 minute time frame, and then we witnessed this very, very strong rally. Now the reason why the 3 minute time frames analysis was supported here was that a positive divergence occurred on the 3 minute time frame. And then we witnessed this very, very strong rally. Now the reason why the 3 minute time frames analysis was supported here was that a 3 minute time frames weakness, we can plan for a lower level entry on the basis of 15-minute time frame. Also, it corroborates our view of short-term potential retracement. We've analyzed the broad market and we've seen that Nifty is suggesting a small correction to the downside. We've analyzed the 75-minute daily and weekly time frame, which suggest short-term bullishness in the stock. So all in all, here is a potential that we can take advantage of. So this is in-depth, in details analysis of how I usually approach a stock for decision making. And from today, I am starting the advanced swing trade training program, where over 24 sessions spread over 6 weeks, I will be teaching everybody the students, the participants, about everything related to swing trading, not just chart analysis, but also how to determine your watch list, how to create your dashboards, how to do relative strength analysis on your watch list stock, so that you can pick up the stocks with the fastest momentum unfolding on the upside. And at the same time, I will teach you about in-depth analysis using RSI, EMAs. I will teach you about candlestick patterns, price patterns, so on and so forth. So if you want more information about that, just hop over to my Telegram channel. And in my Telegram channel, you will see lots of information being shared about the advanced swing trade training program. Just click on this link and you'll be good as gold. So if you want to join my Telegram channel, just go over to Telegram and search Trade with Kavita, right? So you'll write Trade with Kavita, and just be aware there are lots of fake channels running. You don't want to join any of those. So make sure you're typing exactly Trade with Kavita, no numbers, no space, no extra alphabets, and then join the relevant channel on Telegram, right? Additionally, we'll quickly hop over to the stock analysis. So if you have stock queries, don't forget to fill up this form quickly. The link has already been shared for you. Just put down your name, your number, and your stock sticker name, cost price, and a comment if you have any, right? Also, if you're interested in checking out my past analysis of other stocks, you are more than welcome to hop over to my Telegram, to my YouTube channel and watch my past videos. All right. So with that, let me now take you. All right. Let me actually minimize the Telegram. So this is the uh, stock request form. You need to go into this and fill this up, right? So we'll hide this now, and now let me open up your queries and we'll help some people out with their questions today. So if you add your question in the stock request form and you don't receive response on the same day, don't worry, because when I come live next time, and you're next in queue, I will do the analysis, add your levels, and then my team will reach out to you on the WhatsApp number which you've added and share the link of the video and the key levels that I have mentioned in my analysis to you, so that you're well informed. All right, so today we will take in, um, well, I only have 20 more minutes left, so we'll take around these many analysis. So let's start with Sahil's Hindustan Liver. I am evaluating fresh entry. All right, so for your fresh entry in Hindustan Liver, let's hop over to the chart and let's see what we've got here. Okay. Hindustan Liver, you want fresh entry in the stock. So I think you should wait a little bit more because okay, so I see a higher high on RSI, and I also see that the volume here has been picking up strongly with stronger decline in price. Yes, so I don't think Hindustan Unilever is still very, very stable for you to make a potential long entry, because the volume analysis is not very good and the RSI also hasn't really established itself as strong. The 75-minute time frame is still in negative range, so is the 15-minute time frame. So I would still expect the stock to showcase few more, at least 3% more decline. So not a good time to enter yet. 3% might sound very small to you, but for a stock like Hindustan Unilever, 3 to 5% decline can be pretty significant. I think 2150 is a strong support zone potentially here. That is the level that you should also look out for. Moving on, for Raghav, we're looking at graphite, India, and 540. What is my view? He wants to know whether he should exit or keep holding. So his cost price is pretty good, 540. 540, and which means from 540 the stock has gone up around 27-30%. So the 5 week time frame, what does this suggest? Just to get a sense of the broad underlying trend, super cyclical stock, but currently unfolding into a little bit of an uptrend. And there is a okay. I can see that the underlying bull trend is strong with support from volume, but the RSI is indicating some loss of momentum. So what I would suggest is definitely keep holding your position, but at the same time maintain stop loss. And the first stop loss for you would be 400 and maybe a little bit lower here. Yeah, because here I can see there is a pretty strong support zone. So 400 and 637 is where your stop loss should be. Now I know it's a pretty big. Oh, you said 540, right? Yeah, 540. Yeah. Okay. So yeah, 637 should be a pretty good support zone. It will give you stop loss level for you. It gives you a little bit of buffer from the existing support zone of roughly 650 to 645, right? And as per your target, I would expect the stock to at least retest the resistance at 763. Once it sustains above 763, maybe goes above 765, is when I would ask you to check back with me for a revised stop loss and target level. But the kind of momentum it is showing, I would suggest you take it step by step in this stock right now. Okay. Okay, let's see. HCC. Next request is in HCC for Kush. His cost price is 13.3. So you're holding the stock since 4-5 years. It's given you good returns, and you want to check if this company can do a turnaround. You can hold for another 10 years. All right, so we will clean up the chart a little bit here, and I can see that this is like super cyclical stock, and it has given a fantastic breakout, and uh, the underlying rally is quite strong. I don't see any reason why you should give up on the stock, so keep holding. Definitely, I would, however, suggest you to definitely use a stop loss. Nothing is worth not using a stop loss on. For you as a long-term investor, a very comfortable, a level that would give the stock enough breathing room for significant fluctuations, while also not risking your long-term holding would be 26.5, basically the support level right before the most important high. So if this gets breached, then the stock will technically have created lower high, lower low, and that is when you also need to get out of the stock. So 26.5 is where you should maintain a stop loss. I know it's a big level, but then you are holding for the long term, and you should continue to hold for the long term. It is not possible for me to give you a resistance level or a potential target level, because the stock is, or actually I can see there is important resistance at the level of 61.5, and the other is at the level of 105. So those are the two target levels that I would recommend to you on this position. And for anybody wondering if this stock is ideal for fresh entry anymore, um, I wouldn't say so. I think for long term investing, there are much better stocks available for fresh entries out there. All right. So today we started the session a little bit late, but because I have the advanced swing trading session starting in, looks like I need to plug my computer in quickly. Now, because I have the advanced swing trading session starting in just 15 minutes, actually 12 minutes from now, I'm going to have to turn off this session and hop over to prepare for my class. If you are interested in learning detailed swing trading from me, then do consider joining my advanced swing training program. The second batch, first class, is starting today from 6 p.m. onwards. So thank you so much for joining this session, giving me your time and attention. I will see you again on Friday in the Market Outlook series. where I bring to you analysis of Nifty, Bank Nifty, and intersector analysis so that we can assess where the momentum is headed so we can put our cash there. Thank you so much for attending. Namaste.